Chance Finucane's with us, Chief Investment Officer at Oxbow Advisors. It seems that inflation is going in the right direction, but we still saw some hot spots like used cars or shelter. What was your takeaway?
Yeah, we think this is a continuation of the same sort of disinflation we've seen from the peak in June of 22. And for us, it's just a sign of slowing in economic growth. You see a slowdown in inflation, and still suggests to have a defensive stance for your investment portfolios and really trying to avoid any real cyclical areas that we're really starting to see weakness, like in energy and financials in recent months.
Tell me about some of the things that you're diving into, Chance. I mean, you were looking at credit quality and some of the other things that you sent along. I mean, what's standing out to you as far as specifics, Chance?
Yeah, if we're looking for where to place money today, we actually think different from recent years. You can put together a portfolio right now with less risk than what you'd have investing in the total equity market and still be able to generate about a 5% blended dividend yield by owning a combination of short-term and long-term treasuries, some of the preferred stocks of the 4 systemically important banks. And then you can also find some areas within the equity market like REITs, oil pipelines, and even the wireless telecom companies that are yielding 6 or 7 or 8%. And really are trading at reasonable valuations. So if you're able to combine all of that, that allows you to generate a return this year while waiting to see if some of this volatility escalates and potentially gives you some better entry points in high quality growing businesses that right now look more fairly or overvalued to us.
I mean, how worried are we about a recession, Chance?
We would be pretty concerned. And if you just look at some different things like the leading economic indicators or look at the inversion of the treasury yield curve from the 3-month rate all the way down to the 10-year yield, that typically suggests that we're heading into a recession sometime in the next 12 months. And yet in the equity market, you're still not seeming to discount even a 50% chance of that happening. So to Tom's point, I think it just pays to make sure you're in companies with great balance sheets, have consistent cash flow, and that you think can ride through this more difficult period for as long as it lasts.
Thank you so much. Chance Finucane, Oxbow Advisors.
If you like this video and want to stay up to date on our views about the financial markets, please subscribe below to our Oxbow Advisors channel.